Wall Street Trapper just broke down something most people totally miss. Trump might have just lit the fuse on the next major AI boom, and the average investor is sleepwalking straight past it. See, every time a new administration steps in, money doesn't disappear, it moves. And right now, it's moving towards infrastructure, automation, defense grade AI. What Trapper is really saying is this: if AI becomes federal priority, the winners will be the companies that solve real problems, not just hype. Data security, chips, power grids, robotics, and anything that reduces labor costs. While everybody else is arguing politics, the smart money is front running the sectors that get the government contracts. That's where generational wealth is created, long before the headlines catch up. Pay attention. Let's check out this clip.
Family, something major just happened in the country, and most people didn't even catch it. While everybody was online yelling about crashes, recession, and conspiracies, the President of the United States signed an executive order that quietly poured gasoline on the next multi-trillion-dollar boom. This executive order just put us in position to do something explosive. And I gotta break that down to us in this video. And also, I'm gonna get into the charts because I need us to see some things that's going on. I know last week we had a holiday week and a short week, but I really wanna get into this week, what we should see ahead. We got the Fed talking Monday night. We have the first injection of liquidity. A lot of things that we've been talking about previously are now coming into existence, and we gotta talk about it. And if you understand what's happening right now, you're walking to the greatest wealth cycle that America has ever seen. That's right. I truly think this AI revolution 100% is greater than what happened with the dot-com bubble, what happened with the industrial revolutions. Even people like Bill Gates has said, yo, this is probably something we've never seen before in a lifetime. And I truly don't want us to get caught up by the headlines, right? I think if you miss this right here, y'all, I think that you'll regret this for the next 10 to 15 years. Let's start with the headline that should have broke the internet. President Donald J. Trump reveals the Genesis mission to accelerate AI. Family, this is not a little bill. This is a national push to build the most powerful AI infrastructure in the world. Now, before we get into all of that, man, listen, I need you to like, I need you to subscribe, and I need you to share this. I promise this video will not waste your time. It's going to be kind of long because we're going to go through the information, we're going to go through the data, then we're going to get on a chart, and we're going to talk about a lot of things that's ahead, a lot of things that could be coming into fruition because it's December. We talking year-end rally, we talking rate cut, we talking we're going to talk about how President Trump and his administration have been positioning the new Fed so the markets can really bite on that. We got a lot to talk about today, y'all, and I hope y'all really lock in. Get your pen and your pad because this is going to be one you're going to have to watch 2 times. Let's go. 20 plus national science challenges get fast tracked. That's right. Billions flow into AI, labs, data centers, biotech, energy, materials, semiconductors, mandatory government funding into the AI first sectors. I'm gonna say that again, mandatory, y'all. And what does that mean? That means more GPUs get ordered, more data center construction, more AI servers, more power usage, more cooling technology, more infrastructure across the board. This is the bill that Donald Trump just signed quietly. Now, we're not just talking about tech. We're talking energy, software, biology, defense, manufacturing, materials, cybersecurity, all being lifted at the same damn time, This is the government saying AI is not optional, y'all. It is national security. Like, let's just think about that for a second, right? This is not him saying, yeah, we might just do something with AI. This is him saying, nah, This has to be a priority for the United States moving forward. That means this is going to open up so many different things. We talking about from compute, AI compute, to like facilities. We talking about you already have companies like Google, Meta, Amazon, Microsoft saying, yo, the current people who build data centers, they backlog to 2027, 2028. We can't wait for that. So we building our own. Like now you're seeing that push forward with him signing that executive order. This is massive. Here's why you got to pay attention. Because this is policy. This is not rumors. So Michael Burry saying I'm short on NVIDIA, and well, that may work for a little while, but this is policy right here. This surpasses hype. And government spending, it don't trickle, it floods. This is why the biggest wealth in America always sits close to the money printer. That's right. So when the government says we're building supercomputers, foundational models, when they say we got to secure data platforms, what they're really saying is we're guaranteeing revenue for AI companies, whether the economy is hot or cold. This creates what I call risk-free demand. It's a tsunami that will stretch for years because now, watch this. Watch how that go into rate cuts. Well, rate cuts happen. Then what happened? You get free money. When you get free money, people start doing what? They start borrowing. They start borrowing. They start borrowing. And when people start borrowing, we know where it's going on. People are going to borrow money to do what? Comply with this order that's being put out, y'all. I need you to see what's going on here. So when you see people online yelling about bubble, 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 understand something. You ain't witnessing a bubble. You're witnessing the birth of a new category of American power. That's right. And I've been saying this for so long. And so when we see a president do something like this, now let's get a little deeper. Rate cuts on the table. The rate cuts went from, if you go back to the show 3 weeks ago, it was at like 30% when we talked about it. And then last week, it went up to like 79%. This week, what is that? It's at like 86% going into this. Now, we do got a Fed, Jerome Powell, who going to talk Monday night at 8 o'clock. We see it. We know he going to do it. But let's think about it, y'all. So what has President Donald Trump and the rest of his crew been doing, right? After he came out and said, I'm going to fire Jerome Powell. I need to fire Jerome Powell. He came right back. Jerome Powell came on TV and made us sell off, right? That was last Thursday. And everybody was getting on me, oh, Trap, you too hype. You know, when I was saying that we don't care. You know, when I was saying, you lose. Everybody was getting on me about that, right? Because the next day we had a massive sell-off, right? And I simply said, it's not going to last long. And it came out. I told my people, do not panic. Do not panic. Because if you don't panic, there's a lot of money to be made. And what happened? We came into this week and then we did what? We had a sell. We'll get on the chart. We're going to get on the chart. We're going to break that down. We had a buy step in last Friday, and fall back. Well, Friday before last, they fall back. We came in Monday. We came in Tuesday. We came in Wednesday with some follow through. We was off Thursday, came back Friday with a little more follow through. With the Fed rate cut increasing, we see what Donald Trump and his people been doing. They've been putting on show that they've been showing us what? Hey, here's the new person that's coming in. Here's the person that's at I. Here's the person that's the front runner. Here's that person. You know why they doing that? It's letting the market know. I just want to see how they lining us up right here. It's letting the market know. This person that's coming in, we're going to get these rates down to zero. We're going to get them down. And then you heard Donald Trump say what? The market is going to fly to all-time highs. The market is going to go to all-time highs. You had a Fed who said at some point the Fed will be increasing its balance sheet. All of these things are lining up, y'all. This is not just hoopla. This is not just this is them lining us up, y'all. And we got to take advantage. Okay, let's go a little further. The Fed, the same Fed that scared the market last week with hawkish talk, they got dovish. The rate odds are up. Economic outlook, softer. Sentiment, turning. How do we know it's turning? Fear greed went from 5 to like 20. The VIX back down to 18. The Fed is sending a major signal. Watch this. Quantitative tightening ends December 1st. That's Monday. Let me break that down in simple terms. Quantitative tightening is when the Fed pulls money out of the system. Ending quantitative tightening is like loosening the belt after squeezing it for 2 years. That's right, we loosening the belt. Fed Williams came out and put a headline out that said what? We should be expanding our balance sheet again. You know what that means? More liquidity to the market. You know what that means? More credit. You know what that means? More dollars flowing into every asset class.
Whoop-de-doo.
That's why the markets jumped. Again, it's not hype. It's liquidity. It's oxygen for the market. This is the part that retail traders and investors always miss. It's the subtle signs that they tell us on a day in and day out that we see happening. But it's always going to be a gut check. Why? It got to shake the weak hands out. It got to check, like I always, it got to check for shit stains. It got to make sure the greedy people get out the market. Now, we got to think about something. More data. Hedge funds were the biggest buyers last week of the market. And that was with not even a lot of hedge funds even at the table. But guess who the biggest sellers were? Retailers. You know why? Here's why. Because we get on here and we listen to these people with their bearish perspectives, and they come up with this data, these thumbnails and these headlines to scare us. And the same people on CNBC and all these other channels, they flip the story. So what you got to do is say, yo, what is feeding? What is really going on? You got to be able to pull back a little bit, and you got to find trusted sources, y'all. Because here's what a trusted source is going to do. A trusted source is not going to try to scare you for clicks and views. A trusted source won't be biased. It'll say the details. Now, I'm not going to lie to you, y'all. Like, I'm not biased. If we get punched in the face, I'm like, hey, y'all, we got punched in the face, y'all. But here's what I see. I'm going to give you a gem that I've learned. In this game, optimism wins more than pessimism. That's right. The pessimistic person loses more than the optimistic person. And so for me, it's always trying to find balance and, okay, I see what's going on, but how do I, where's the date? Because in this game, once you start thinking negative, and once they get you to that negative thinking, once they get you, like, it overwhelms you and you can't even think right. When retail is selling and the hedge funds are stepping back in, the hedge funds become the biggest buyers. The institutions, buyers. Retail, biggest net sellers. Yo, we got small hands. You know what that means? The people with the data, the people with the quant systems, the people who actually understand the liquidity, who are creating it, who are hunting it. They were the biggest buyers last week. Are you buying? Why everyday retailers, they're selling out of fear. This is the same pattern, y'all, that we saw in 2009. This is the same pattern that we saw in 2020. This is the same pattern we saw in 2022. This is the same pattern we saw with the Liberation Day. Every time the big money loads up, the retail always panics. I promise you, the next 12 to 24 months, it's going to be a historic bull run. You know why? Even companies, JP Morgan, Morgan Stanley, both raising targets for 2026. That's, again, not speculation. That's positioning. And it's something I said a million times. When has the market ever crashed? When everybody saw the crash coming. We have data that is showing us that in December, more equities have been bought by hedge funds than ever. Now, you can make an argument to say, Trap, ain't nothing been going like they've been saying, bro. I ain't gonna lie. And I would be one to agree. I definitely be one to say you cannot. This has been a year where, yeah, it's been going different. But I'm gonna say, I think all the signs are leading us the right way. So over the last decade, December has historically been the biggest month for equities inflow by a landslide. Meaning, by a landslide, December has been the month where more equities are getting bought, more stocks, more securities are getting bought. Why? Tax loss harvesting ends. Funds start to rebalance. Institutions position for the next year. Bonuses get allocated, and the year-end liquidity rises because everybody know that last week of Christmas and going into the new year, they won't be straight. This is why you see the strongest rallies when everybody thinks the year is over. It's not over. It's setting up. What does this mean for you? Well, you got forecasts. You got JP Morgan saying 7,800. You got Morgan Stanley, strong. Got JP Morgan saying rate cuts. So let's just tie it all together and make a blueprint. The government launching Genesis AI mission, check. AI becoming national infrastructure, check. Fed getting dovish, check. QT ending, check. Balance sheet expansion, likely, check. Institutions buying, check. Retailers selling, check. December inflows coming in, check. Bank raising market targets, check. Family, this ain't fear season, this opportunity season. And the worst time to invest is when everything looks, let me just make sure I say this to you. The worst time to invest is when the shoe shine man is telling you buy stocks. The best time to invest is when the shoe shine man is telling you get out of stocks. Everything looks confusing. This is exactly how the wealthy get wealthier. They buy when the narrative is messy and when the world gets noisy and the stock market looks like the worst place to have your money. I told my people something in my community. I said, listen to me, y'all. When that fear index gets into single digits, it's time for us to buy. It's time for us to go long. America runs in cycles. Every cycle has fear, period, confusion, period, and then the wealth period. We are sitting in the confusion period, the period where most people freeze, but this is the period where the top 5 start building generational plays. So don't let the fear rob you of your future. Don't let the noise shake you out the game. This is the moment where investors become generational. Stay disciplined, stay prepared, stay in the game long enough to get the gain. I'm gonna say that again, stay in the game long enough to get the gain. Because while they panic, we eat. Now, before I go any further, y'all, let's get into the chart. I won't get into the SPY chart so you all can see what the hell going on. Let's go. All right, y'all. So let's get into this S&P, man. So we got to first lock in. So first thing y'all know we gonna do, man, we gonna get in here and we gonna speak on this as of last week with intentions on what we gonna do. So we're gonna do a mixture of what we are looking for this week and what happened last week. So the first thing we're gonna do is we're gonna notice that this candle here, this is a strong buy candle, right? Because there's literally no top wick, which means there was no rejection at the top. That means bias definitely just dominated this week, right? That means bias dominated this week on the SPY. So we'll mark that out right quick. Boom, and we'll hit that with our, so we'll go previous week high, right? So we can mark that out and then we'll type here, we're gonna lay this out, previous week low, boom. Now, it's important that we mark that out because going into this week, there's going to be key zones for us, right? But also, while we're here, we got to mark our all-time high, but we're going to get us a different color. We're going to go with that, and then we're going to put our all-time high out there because that's going to be essential for us. Right, now, before we even get any further into that, let's just look at something right quick. Y'all know we marked this line out last week, right here, on our last show. And that's what I like about doing these Sunday shows now is because we get to, if you go back to the last Sunday show and come to this show, well, if you go back to the last Sunday, we do these Sunday drops, you can come in and see like what's going on. So for me, this is the line in the sand right here, right? That was the line in the sand at 653, you can go 650, but I always look at it as zones instead of like exacts. But that's our line in the sand. Let's bring this closer so we can get it, right? So, because we have that multiple touch point right there. All right, there we go. So We like that zone right there. For me, that's a huge line in the sand for us, simply because we saw that line got touched a few times. If we looking at it, we see one on a strong, and we see that was the Trump sell-off right there. And then last week, we see that it got absorbed right there. We see sellers pushed it down, and then we had some absorption on this week right here. So we saw that sellers pushed it down, and then you had buyers absorb that selling pressure. Sellers were still in control on that. Notice we have a from all-time high. We reached all-time high, then we had a 3-week down sell-off. So you have a lot of trap buyers up in there right there. Now, I will say from these last 2 weeks, this week and this week, from this candle right here, some of those buyers got released, maybe took some profits, kind of got out of there. But now you have some trap sellers in there, because you got some trap sellers in there right here. Trap sellers mean people that thought the market was going to go down some more. They put some puts in, and they got trapped up inside of there. So that's real cool right there. Now let's go a little further though. Before we get into anything else, let's just put this trend line up. That's going to be essential for us to see, just so we can see what's going on and what we got, what we fighting against. I think it's important that we see that. Just without even going any further with that, notice how we closed on top of the trend line. Now, that's powerful, right? That's really, really, really powerful to close on top of the trend line. We were below the trend line. That tells us that buyers picked up pressure and they covered up a lot of room. Now, just a little further, what I want to do is I want to open this up, and I'm going to really dig into this, and I'm just give y'all this one so we can make sure we all on the same track. And I like to kind of work these little situations slow so that everybody can get a great understanding of like what's going on. Because I know, like, unlike a lot of people, man, I've learned that people oftentimes teach to their experience and not to the experience of the people who watching. So one of the things I want to talk about here in this little situation right here is this right here, y'all. That's important for us to look at. And that'll be this situation right here. And the reason why that's important, because I want you to notice something, right? So what we had here was we had a candle that opened above last week's close. That's good. And then we had that same candle, this green candle here, opened above last week's close, but it also closed above last week's close, last week's high, and then it closed above the previous week's open and close. Not the high, it got really close to the high, but it didn't really close above it. It kind of gave it an equal high. Right? So that's essential. So you had one candle that almost, we can say, took out 2 weeks worth of price action or movement, which is essential. That tells us that we got some buying pressure that's in place right now. Now, the next thing we want to do is, let me take that off the screen. Let's put our indicators up. You know, we're going to go with our 50 and our 20. That's what I like to use. And then we're going to come with our volume. We need that volume profile. You know, we need that volume in so we can see that. Boom. Then we're going to mark this to see what that average volume was. And it's essential for us to know what that average volume was. Now, you say last week we had below average volume. Well, you know, we had a short week. And because we had a short week, a holiday week, all the institutions wasn't in. So that's essential. The next thing we're going to do is we're going to come use our 20. That's essential. Give it a look so we know we can know which one is our 20. We can go with the blue line. I'm cool with that. But that's connecting right there. So we want to do something. Let's make it green. And then let's make it so we can see it. All right. And then the next thing we're going to do is come here. We're going to get our 50. And again, the reason why I use the 50 and the reason why I use the 20 is because that allows me to see the short-term momentum. Right? That allows me to see who has the short-term trend. For me, that's important. And for you, it should be important, right? Because it tells us who's in control on the short term. So notice what we see right here. Just looking at that. So out the gate, what do we see? We have an ascending channel right? That's this channel that's going up. We have an ascending channel that hit all-time high. After it hit all-time high, we saw that sellers stepped in. So we had a lot of selling pressure for 3 weeks in a row, right? And then we see that our sellers pushed us down on top of our 20-day SMA, in which our buyers absorbed. And then we see that 652 kind of was a line in the sand. So 650, 652, this was kind of a line in the sand. We saw it got touched 3 times, 1, 2, 3, and it got attempted to be touched 2 more times. So in total, that area right there has a 5-time touch. Let's count it. 1, 2, 3, 4, 5. Right. So that was a key area. And I still would like to keep that area as an area that we pay close attention to. Now, the next thing I want to do is we're going to talk about we have trapped buyers from all-time high. Buyers got trapped, meaning people who ran up to all-time high. They saw the market going up all-time high, and they got trapped for 3 weeks, right? But then you see at the last candle, you see the candle, we bounced off. I mean, before the green candle, the red candle, we see we bounced off top of the SMA 20. Bouncing off that, we had a nice momentum by the buyers to take control of that, close above the trend line, which is key, right? Buyers got us back on top of the trend line, which is key. And then they trapped some sellers while also taking some profit. So that's what we can look at just off the monthly. Just off the weekly. Now, we can say that there's some from all-time high to where we are now. So all-time high is 689. Current closes at 683. I don't want to necessarily call it compression, but we are threatening now all-time highs on the S&P 500, which is good. And then one of the things that we do see that is really good is we see our SMA 20 and our 50 pointing upward, right? That's a key sign for us. Now let's go a little further into this. All right, now let's get into our daily chart, right? Now this is essential for us. So the first thing we're gonna do in our daily chart is we gotta make a correction. Not really make a correction, but we gotta add something to it. Previous week high, then we're gonna throw this line, we're gonna go previous day's high. So that's based off Friday, right? And then we're gonna come back and we're gonna come with a line here, but we're gonna change that line to purple. And we're going to mark that line so we know, and that's previous day's low. So now we have marked out Friday's high. We have Friday's high and Friday low marked out. Now, the interesting thing about this is let's talk about what we see here, right? So if we're looking at this, we still see this trend going. And what that tells us is we are in macro uptrend was intact. Macro mean bigger picture uptrend intact. And then we did have a micro, which is smaller picture, selling pressure. So you see we came from all-time high, which was 689 up here, all the way down to 652. So that's micro. We had micro, a bullish, or you can say, bearish mark, bearish sentiment, or you can say selling pressure. That's kind of what I like to use. Just we had macro selling pressure where the sellers were in control for a few weeks, right? So, but here's a key place for us to look at right here. Right, y'all know we go back to that. I call that the Twin Towers, right? That Twin Towers, that was an area of consolidation for the market, right? So we know that area right there was a pretty tough area. As we call the Twin Towers, those two red bearish candles right there. So from all-time high, what did we see? We saw a lot of selling pressure. And from that selling pressure, what did we see? We see the bears took over the SMA 20, which is the green trend line, and we saw they took, moving average, and we saw they took over the 50 moving average, which tells us that sellers are in short-term momentum control, right? But from that, what did we see? We saw coming from 652, that first candle you see at the bottom right there, that tells us that buyers, right, off that low, buyers stepped in and absorbed all of that pressure. Right, meaning as sellers pushed it down at 650, Sellers got it down to 650, right? Buyers absorbed it at 650. They absorbed those sell orders and they pushed it back up. And buyers pushed it up as far as 664. And then it came down and they settled at 658, which was a good sign for the buyers. Why? Because it said, yo, we're not going to let y'all push us far down. To match that, you see you had a lot of volume at the bottom right here. So that's key for us to see that, to pay attention to, right? Then the next day you had with a gap up. That was Friday. We came in Monday and had a gap up. And then sellers pushed down again to 661. Now, this was essential. This was key because in that same day, what do we see is in that same candle, we see buyers push it all the way up in this candle all the way to 670, which broke the SMA 50, but that got absorbed. Sellers pushed us down, right? Tuesday was the next day. What did we see? We opened right on top of it. Sellers pushed us back down. Another buyers absorbed it, right? Absorbed those sell orders, pushed us back up and touched right on top of what? On top of our twin towers. Now, y'all know if y'all go back to 2 weeks ago, I kept saying, this is a pivotal area. This is a pivotal area. We need to get on top of this area. We need to get on top of this area. That was truly, truly, truly essential for us to get on top of that, right? Because if we didn't get on top of that, that tells us for sure that sellers were putting a lot of pressure on top of the buyers. So then the next day, what do we see? We see the sellers get reject that, and then Wednesday, you have the gap up. Now, this candle here is essential, right? And the Wednesday candle is essential because the Wednesday's candle solidifies that we on top of the SMA 20, we on top of the SMA 50, and then we open above the distribution box. So that box, and the reason why I'm saying it's distribution because after all-time highs, we had that huge sell-off down. So the market flooded us with supply, right? So now that candle was essential. The reason why I say that candle was essential because that was truly, in my mind, a control shift candle, right? That candle was important because that day on Wednesday, everybody had a job. And I'm talking about this candle right here. I'm gonna make sure everybody see it. To me, that candle was an important candle on Wednesday. And the reason why I say that candle was an important candle because that was the candle that said we are shifting control. And here's why I say that. Notice that candle has a wick at the top, a wick at the bottom, right? But it's a small body candle compared to the three previous candles before that. So that candle there tells us that we just got back on top of the box, right? Which was important. Why was it important? We broke the SMA 50. We got back on top of the SMA 20. Not only did we do that, we got on top of a very, very, very pivotal moment in the chart. And the reason why that was a pivotal moment is because that moment got us right back on top of the Twin Towers. So buyers had a job. The buyer's job was to resume. Even if they didn't push up further or really, really high, their job was to get on top of that box. That had been a struggle. The seller's job was to push us back into that box. And because they couldn't push us back into that box, that really gave a moment. That gave a moment of clarity for the buyers and the sellers. And here's why. Another thing that happened was you had the SMA pinch. Now, what I mean by that is you had the 20-day and the 50-day. They created what's called like a little pinch. Now, if this is me going deep into the institutional box, but anytime you having a rising SMA 50 and a rising SMA 20, and they create that little pinch, right? That typically tells us that that's more of like a pressure cooker, right? Because they're coming together and they about to either explode to the upside or they're going to cross back over, right? And which means you want to see that pinch lets us know that 20 is probably about to curve up a murder and separate completely, or that it'll cross back over. So the next breakout is usually an acceleration to liquidity. Now, what that liquidity is probably going to be is what? That all-time high is going to chase it. So let's just be mindful of that. Now I'm going to bring the Fibonacci in, and I'm going to help us out a little bit further so we can go a little bit further, because what we need to understand is right now we are in a compression zone. Now, let me talk about this for a little bit. I want to walk us through so we can understand what we're looking at and what we're seeing. Now, what I'm saying in this moment is this, right? And I like to talk slow right here so we can understand what's really going on, because I think that once you start reading these charts and once you start seeing it without all of the high verbiage and all of that, you can really know what the hell's going on. So we talked about this candle being important. And why? Because the market the buyers had just reclaimed something. They had just won a war. Right, and the war that they had just won was got pushed down here, and it took them 5 days. Now notice something. The 5 days, the first day you see this candle here with the long wicks at the top and the bottom, right? That's a fight being had. And then the next thing we get another larger body candle, right? But you have wicks, but the wicks are smaller. That's continuation. And then the third candle becomes the candle that has a larger body, and you see buyers keep absorbing those sell orders. Now, that's a lot to tell us right there. And if we look at the volume at the bottom, what do we see? We see volume picking up, but because it was a low week with volume, because you didn't have a lot of the big players in, and also let's mind you that NVIDIA is not participating in this. That's a key component. All of these days, NVIDIA is still down. They are not participating in it. So that tells us another thing. That tells us that the market is having what's called a broad range of stocks that is lifting this up. So it's not the NVIDIA, it's not the Palantirs, right? It's the Googles, it's the Googles, it's the Meta bouncing off the bottom. It's AVGO, it's healthcare, it's gold, it's a lot of other things outside of the usual suspects, right? But then you get this third candle, that Wednesday candle, which is a smaller candle. And the reason why I say that it's a control shift candle is because the energy is shifting. Why? So notice that it pushed up, but then it closed back down, but it didn't go back into that box, right? The next day, you get this next candle, which is this one. Let's open it up a little bit more. Not a huge candle, not a massive candle, because you had half a day. But notice something. This candle is majority just body, right? Even on a low volume day. But you still got a open and a close above previous day. That is strong. That is some sentiment for us. But I don't want to just stop right there. What I also want to do here is I want to do this. I'm going to move this box out of the way. Now, because we came from this high to this low, we're going to use our fib. And we're going to use our fib the right way. We're going to come from swing high to swing low. We're going to come down to 52. We're going to go to all-time high. And we're going to see what does the fib tell us about this situation. All right? What does the fib tell us? First and foremost, this candle is above our 786. What does that mean? Well, because we coming from swing high to swing low, right? That's telling us that the market we going from swing high to swing low is more of a downtrend. So this sell side, you're looking for puts here, right? You're looking for the market to give you puts here, right? You're looking to get in some puts to sell. Well, what happens is normally you can say, okay, well, if anything under that 0.5 is strong for the sellers, and then anything in between is the half and the 618 is what's called the golden zone. This is not me being brilliant. This is just what it is, right? So you would look for anything in that golden zone to sell back down and give us some downside pressure. So anything inside of this zone right here, you're saying, okay, right? Anything inside of here, you're saying anything inside of there, could give us some room back to the downside, but we didn't get nothing right there, right? So now you start seeing a reversal take place. Well, how do we say that? Well, we get a close on top of the 786. The close on top of the 786 tells us it's a strong chance that the reversal has taken place, because I didn't get a bounce back up to 382. I didn't get a bounce back to the downside on 0.5. I didn't get a bounce back down on top of 618. And I didn't get a bounce right underneath the 786, which is the deepest discount you can get, right? That's kind of the deepest discount you want on a fib going to the downside. I didn't get that. What did I get? I got a candle close above that. Also, let's talk about how that 618 is pivotal, because we have a candle close above the 618 and the that 0.5 mark, which is the half mark, right? And the thing about that is, and what I want us to understand is that 786 becomes like it's almost like an institutional point on the Fed, right? Because the macro from there tells us like bearish control. It fails. And then it starts to go up. So even in the macro, that fails, right? So in the big picture, it fails, but most so in the smaller picture, because remember, micro means small. So in the micro short term, bears failed to put more pressure on us from 786. And then because the 618 sits directly on top of the SMA, that is a premium continuation confluence, right? We got to close above the 618 and we got to close above the 20-day SMA. That tells us something. And then we get acceptance, meaning we get a candle close above the 786. That alone tells us that control has been shifted. Now, the one thing that will be important is, I'll be honest, I want to see a small dip to the bottom so we can recharge and go back up and challenge all-time highs. But I'm not necessarily mad at where we are with what's going on. Now, let me go a little step further, because I want to go back for a second. And I want to show you something that I should have showed y'all earlier. I want to go to this monthly. Now this candle is this. Now this is going to be forgotten about, but I'll be the one to talk about it. So if you look at this last candle, right, this is clearly a bullish candle. Why is this a bullish candle? Well, because watch this. This tells us right here that sellers were in control. Sellers were in complete control. I'm gonna draw on it instead of I'd rather draw on it than to do it. So this tells us that sellers were in complete control, right? But they lost control, because in order for us to get that long wick, down there, that means this candle had to be a full red candle, right? And that means that buyers absorbed all of that pressure, right? That means buyers absorbed all of that pressure. Now, because it's still red, it tells us that buyers didn't flip it, right? That means buyers didn't flip it, but it does mean, think about it like this: buyers didn't take control over the opening, but they pushed it back really, really close, right? And so now it tells us that control is on the buying side, because anytime buyers can push something like that, control is definitely on their side. So that's definitely something that we want to be responsible for and something that we want to look forward to. Right. And if I came back here, if I get back on my daily, I'll just say something simple, because I'm not the type of person, I'm not biased about nothing. Right. So what I'm going to say is previous day high. We'll put that right there. Boom. And then we'll just run it back right here. Previous day low. Boom, right there. We'll open that up so people can see it. Then we'll give them our box right here. And then we'll come here one more time. Draw it out for y'all. All right, so if I'm just looking at it, like if I'm just being 100% real, so here's what you need to see and just being honest. So buyers need to get above that previous day's high. I would say at least they gotta attack this 685, but they gotta go attack that all-time high, because you know you're gonna have some stops above that all-time high for sure. You're gonna have stops above there. Those are people, you gotta be willing to take those orders that's on top of there, those stops that's gonna be on top of that, and use that to go higher into blue sky or new charted waters. For the sellers, it's going to be important for you to get back to Friday's low, breaking that previous day's low. And then the next goal is to drive us inside of that box. If I'm buyers, you know, that's the goal to defend. So this week going to be real interesting, especially with Jay Powell on the microphone Monday. As a matter of fact, let's look at that right quick. Fed watch, as you can see, as of this. It's 10 days, 13 hours, 16 minutes. We have a Fed watch. And then as you can see, you know, that's what I was talking about. We have an 86% chance of a rate cut on December, which is going to be critical. At least a 25% rate cut. That's going to be key. And they even saying that we have a greater chance for another one in January. So that's essential to what he's trying to see. And if we go a little further, I'll show y'all this right quick. Again, you should have this on your calendar. Forex Factory. As you can see right here at 8 o'clock, we got Jerome Powell speaking. Right, 8 o'clock Monday. 8 p.m., you got Jerome Powell speaking. And so that's going to be essential for what's going on this week, y'all. So, man, I hope that this was good. I hope that this was informal. I hope that this is a dope breakdown for y'all. We can go through the cues. I can walk through that. I can walk through the cues right quick because it's almost the same, identical. Only thing, the cues got a little more pressure on them. I like the momentum that the Qs have, but they almost look identical. The Q, the S&P is just up a little more, same thing. So you have this hammer right here, or hangman right there. Still buyers absorbed a lot of the selling pressure, but they still controlled it. And then, like I said, we still stayed above. When we go to the weekly, we stayed above it. Same thing, that line, 588. Sellers did push down, buyers absorbed it. Now you have some trapped buyers, some trapped sellers, people who was here in the bottom of that, they was trapped. But you also have some buyers that got released from here. You did close above. You did close above where it opened at, right above it, not major, but that 619 was essential. You closed above, so you essentially wiped those 2 weeks out. You didn't overtake it all the way, but you did close in line with it, which is good. We like that. Buyers are content. And then if we go to the daily, you know, now we get just a little more action. Almost the same things go. Above that, you get that pinch. You still get that pinch that we talked about. They almost identical, man. Right? You still get that pinch. Trap sellers down here. You got the trap sellers here. You got some buyers getting released. We took out the Twin Towers. You get the close. This was the shift. The only thing, the shift was here. You get the shift on top of the box, and then you get this candle here. Now, what I will say is you definitely got to see the buyers take control of this previous week's high at 619. You got to see them do that. I will want to see them get on top of this right here. This is going to be important right here. 626 is going to be essential for them to get above that. If I'm looking for the cues, I'm definitely waiting for that. You'll get on top of 626. You get on top of 626. You have some overhead supply right here, but with the right volume, you can take that. I actually will want to see the Qs come down, bounce on top of that box, then go up, use that as buying pressure. But that's what I see. And if NVIDIA can join the party at any way, the Qs definitely can like explode. But I also am looking at Google as someone that's saying, yo, like, we got this. Give me the baton. We got this. And that's kind of what you want to see. Honestly, you want to see somebody else step in. You don't want the whole market to be sitting on NVIDIA waiting for them to just help us get through. You want to see somebody like an AVGO or a Google stepping up, carrying some of that weight that people are flooding into. That way, when NVIDIA do step in, it'll blow up the S&P and that. So just be mindful for that this weekend. But the charts are similar right there with those two. Looking at the SPY, looking at the QQQ, nothing real crazy. Both charts still up for the year. And I just truly think that this is going to be a moment where we see something phenomenal happen going into this year and going into the beginning of this year. Now, I will say, here's one stock I'm looking at that I will show y'all. It's called Credo, CRDO. We noticed that this is when I put in my group for a minute. Inside of this box right here, it's just in that slop and chop box. That's on the weekly. Look at the run up it did, right? Again, inside of that chop and slop box. It actually has earnings this week. So this one, I think, man, I got my eye on it. One of those things is what I'm looking for sure. CRDO, that's one of the ones I'm looking for going into this week for sure. Man, listen, I hope this video helped y'all out a lot. I hope this video definitely took us to another level this week. We got a lot to look forward to this week. I truly think that this is one of these weeks where the market is setting us up for a strong year-end rally. Jay Powell talks 8 o'clock that night. Then we have another one the next week. We get that rate cut. I think this is going to be explosive, y'all. It's your boy, the Wall Street Chapman, man. Make sure you like, make sure you subscribe, make sure you share. Comment in the chat and tell me what you think. I know this was kind of long, but this our week. This our week recap and what we going forward to. Y'all told me y'all like these. Y'all told me y'all like when I go in depth with these. So lock in with me, man. Salute.